You are watching Market Watch, the brief overview of the key events from the world of finance. Our expectations are confirmed, as incoming statistics from the United States indicate still high purchasing activity. This really undermines faith in the willingness of the American regulator to reduce the key interest rate. Recall that in December, retail sales in the United States increased by 0.6% with an optimistic forecast of 0.4%. The growth of this indicator significantly increases the likelihood of accelerating inflation, which in turn calls into question the expediency of lowering the key interest rate. Investors understand all this perfectly well, returning to the US dollar and gradually abandoning risky assets. Key US stock indexes remain in the red zone, reacting to a significant decrease in the likelihood of easing the monetary policy of the Federal Reserve System. Moderate sales on the US stock market are also facilitated by the growth in government bond yields, which are recovering from a decline over the past 3 months. Even a slight increase in interest income, according to the most reliable investment instrument in the United States, puts noticeable pressure on stock indexes, gold, and risky currencies. It's not so much about a change in demand for a certain group of assets, as it is about a change in sentiment in financial markets. And now let's move on to gold, which continues to decline, coming very close to the psychological mark of $2,000. As we noted earlier, the breakthrough of support at the $2,017 mark was accompanied by an increase in seller activity. Also, overcoming this barrier may result in the formation of a more powerful wave of decline. But in order to implement a bearish scenario, additional confirmation is needed that the world's largest economy remains stable. This scenario is becoming more and more likely, as China demonstrates high growth rates, with outpacing industrial production growth rates. Traditionally, we conclude the review with the cryptocurrency market. There have been no significant changes here. Bitcoin continues to trade above $42,000, while interest in Bitcoin ETFs continues to increase. In just 4 days since their appearance, the trading volume has reached $10 billion. But it is important to understand that we are talking about trading volume, and not about the net inflow of capital into Bitcoin. However, in the absence of unexpected and significant problems in the cryptocurrency market and with Bitcoin ETFs, in particular, the bullish scenario still remains a priority. After all, as soon as the purchased Bitcoins for exchange-traded funds are redeemed, the next stage of purchase will begin to fill the next funds, which should serve as another impetus for the market. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.